Perfect, thank you. It looks like people are still coming in, but since it's noon and we only have an hour, we'll go ahead and get started. So I just want to welcome everyone to the second session of our nonprofit bootcamp series. My name is Lauren. I work in the Lewis County Planning and Community Development Office, and I just wanted to start by thanking everyone for joining us for this session focused on nonprofit finances. I also want to give a quick shout out to the Tug Hill Commission and Northern New York Community Foundation who have partnered with us to put on this training series. We thought a session on financial management would be especially valuable for nonprofit leaders since understanding financial statements, creating budgets, and managing oversight can often feel quite a bit overwhelming. So we hope you guys pick up some practical tools to take back to your organizations today. Before we get started, I'll just give a quick overview of the agenda. We have two representatives from Bowers joining us today, Nick and Rich. They'll be our topic experts. They'll present for around 30 minutes, and they'll be followed up by Lindsay Baldwin, who's the CFO of the Fort Drum Regional Health Planning Organization, who will share her perspective as a local champion and speak from the nonprofit point of view for about 15 minutes. And then whatever time we have left, we will use for question and answer. So as you have questions, feel free to throw them in the chat, and then we will get to them then. So with that, I will pass it over to Bowers.
Good afternoon, everyone. It is noon. Welcome all virtual attendees to today's presentation. I am Lori Povden, one of the partners from our Watertown office. We appreciate the invite as one of your presenters, and hopefully we will cover a few topics that you find beneficial to you and your organization. As a firm, we have a longstanding commitment to the nonprofit community and consider nonprofits to be one of our areas of expertise. Our Watertown office currently has over 40 nonprofit audits and reviews. We work closely with our nonprofit clients, helping them improve financial stewardship and consult and assisting in strengthening governance and operational practices. Our Watertown nonprofit audit team is in attendance today, and there's our names and our titles. And so in the Q&A, probably other partners and managers will jump in and answer the questions. We won't leave it all on Nick and Rich. But Nick and Rich will be leading the presentation today, so let's get started.
Okay, thank you, Lori. I'll start by going over the agenda and session goals. We'll be focusing on 5 main topics: how to properly review financial statements, creating and understanding budgets, implementing internal controls and financial policies, the role of the board of directors and leadership, and the importance of audits and annual reporting. Today's session goals will be demonstrating how financial oversight helps strengthen an organization's ability to manage resources responsibly and make informed financial decisions. So why financial oversight matters. Financial oversight ensures that donor and grant funds are used as intended. Ensures effective use of resources, so the ability to control costs, manage budgets, and make informed decisions on the allocation of resources. These help maximize the impact of funding towards the mission and goals of that organization. Good financial practices make it easier to plan for the future, respond to unexpected challenges, and mitigate cash flow issues. Protects the organization's reputation by helping avoid any grant compliance, legal or audit issues. And strong financial oversight leads to transparency, which helps build donor confidence and public trust. So getting into our first topic here, we'll start by reviewing financial statements. So I'll go over the 4 key statements of a nonprofit and then go into some depth on the following slides on each. So the first is the statement of financial position, or the balance sheet. The second is the statement of activities, or the income statement. Third would be the statement of cash flows, and fourth is the statement of functional expenses. So here's an example of a statement of financial position. This statement shows what the organization owns or its assets and what it owes or its liabilities, and then along with net assets at a given time. So this is a classified balance sheet on this example. So at the top, you'll see assets are split up by current and non-current assets. Liabilities are also split up by current or non-current liabilities. This example does not have any non-current liabilities, but an example would be long-term debt if it were applicable. And then at the bottom, the summary of net assets. your net assets plus your liabilities equal back to your assets. Just one use of this statement, I guess, here. It helps an organization assess liquidity. The current ratio is the current assets divided by the current liabilities. So a ratio greater than 1 is favorable and indicates that the organization has enough liquidity to cover its short-term obligations. Next would be the statement of activities. This shows the organization's performance with totals for revenues and expenditures over a given period of time. The calculation shows at the bottom there the net profit or loss for the period, or as it's called for a nonprofit, the change in net assets. You'll also see at the top, it's separated between without donor restrictions and with donor restrictions. This differentiates between the two classes of net assets. Next statement we'll look at is the statement of cash flows. This statement focuses on the organization's liquidity, explaining the change in cash for a time period through operating, investing, and financing costs. While the financial statements are on the accrual basis, this statement shows more so a cash basis. So your cash inflows and outflows for the fiscal year. Quickly running through the statement, up at the top, there's a change in net assets that's coming right from the statement of activities. And then you have your reconciling items, depreciation, any realized or unrealized gains on investments. Then the increases and decreases in operating assets and liabilities. That will all total down to net cash provided by or used in operating activities. And then the investing activities. So that will be your purchase or sale of property and equipment or investments, for example. And then finally, your financing activities. So you'll see here payments on debt. Any cash inflows from borrowings would also be in that section. I'd say a best practice would be to monitor and evaluate your cash flows throughout the year, not just on your audited financials, so you have a good picture moving through the year. Next would be the statement of functional expenses. This statement shows how the funds are used or allocated for specific organization purposes versus administration costs or fundraising costs. This helps give a picture of how much resources are allocated towards the organization's mission or goals, as opposed to management in general or overhead costs. The statement is really important because it gives the organization the ability to track expenditures by these classifications. So you can run a program expense ratio. So you're taking your total program expense costs, which in this would be the project expenses column, divided by the total expenses to show your percentage of expenditures dedicated to fulfilling the organization's goal or mission. The ratio will often vary organization to organization, but a higher ratio may be a good sign to donors that funds contributed are going towards the organization's set mission. A common benchmark is about 70% of expenses to be towards program expenses. Slightly lower might be reasonable, depending on the organization's administrative and fundraising needs. But yeah, determining these percentages are the responsibility of the nonprofit, and they should be analyzed annually so that appropriate allocation is based on time and effort for salaries, as well as resources needed for the operation of the programs in that given year. Next, I'll go over just a couple things to look at when reading your financials. And so look for trends, utilize year over year, month to month, or even compare to fluctuations in prior years. Looking at the trends helps give a strong idea on that period or year's activity. Speaking from an audit side, when we get a client's trial balances, that's really one of the first things we do. We'll look to see what changed, and that helps us give a good picture of what occurred during that audit period. Examine revenue diversification and key ratios. So first, look for the mix of revenue sources. This can point out if there's a concentration risk, if the organization relies too heavily on one or a few funding sources. We've already talked about a few ratios, but a couple more to keep in mind would be the debt to asset ratio. This is taking the total liabilities divided by total assets to assess the financial leverage and solvency of the organization. The lower ratio would be the stronger financial position. Another key ratio is the net asset ratio. This is determined by taking the total net assets divided by total assets. This shows a proportion of assets that are funded by the organization's own funds. So here a higher percentage would represent greater financial stability. Another thing to look for would be to note donor restricted versus unrestricted funds. So we can see an example of this actually on the statement of activities example. I'll flip to that real quick. So here you can see at the top the two highlighted columns without donor restrictions and with donor restrictions. So that will summarize the revenues and expenses for the donor and non-donor restrictions, and also have net assets released from restrictions for that period. Assessing these amounts helps get a full picture of the flexibility an organization has with their funds, as these restricted funds are to be used only for a specific purpose and not for general expenditures. Trying to get it to go back, but I'll just move on. And a couple other items I had noted, I can't get the slideshow to go back right now, but would be to review variances between the budget to actual results. This is important because reviewing the final budget against the actual for revenues and expenses helps identify where spending or revenue collection needs to be adjusted and can ensure the budget forecasts are accurate. And assessing liquidity. So the question of liquidity would be, do we have enough cash on hand to meet short-term obligations? We've already talked about the current ratio, but I'll flip to the next slide to show the liquidity note, which is included in the notes of the financial statements. Here you'll see the financial assets up top that are summed up, and then this note takes the purpose or time restricted grants and will subtract those out to get financial assets available to meet cash needs for that year. So this kind of shows this will give a more accurate representation of the organization's funds after removing funds that are earmarked for a specific purpose. Organizations should be aware of their level of available financial assets that do not have any time or purpose restrictions, and how that compares to operating budgets, need for cash flows, and having enough financial assets to maintain operations. So monitoring this continuously with the statement of cash flows is a good recommendation to determine actual cash on hand without restrictions. So now that we've discussed the financial statements and some items to look for when reviewing them, I'll move on to the creating and understanding budget section. So first we'll go over why a strong budget matters. A strong budget connects mission goals to financial realities. A good budget just isn't about numbers, it's about ensuring that the resources allocated support the organization effectively. It provides a roadmap for programs and operations, helps build organizational accountability and transparency, helps anticipate and manage risks. A strong budget gives the organization flexibility. So special planning helps the organization better deal with any significant events that may occur throughout the year. And a strong budget strengthens donor and funding agencies' confidence. When budgets are transparent and realistic, donors, funders, and the board have greater trust in the organization. Steps to build a strong budget. Some steps would be to review strategic goals and program plans. The budget process should really start with the mission priorities and be built around program plans to meet the organization's mission. Estimate revenues from all sources and expenses by program or function, including all indirect costs. Revenue should be estimated conservatively and expenses realistically. This helps create a flexible budget for any unforeseen circumstances throughout the year. Plan for what if scenarios. These include planning for items like funding cuts or new funding opportunities. Gives the budget the flexibility for the organization to stay resilient and have the ability to respond without panic or making poor decisions. And your final budget should obtain board approval before the start of the fiscal year. So accurate estimation of revenues and expenses is very important when creating your budget. So I'll go over a few things to be mindful of for both revenues and expenses. Use historical data and confirmed commitments. Diversify income streams by grants, donations, events, etc. Be cautious of one-time or uncertain grants, and track restricted versus non-restricted. So as I said, it's important to be conservative when estimating your revenues, because overestimating revenues is one of the most common budgeting mistakes. It's also important to differentiate between committed funding and pending funding, so you're not banking on funding that might not come through, and differentiate between restricted and unrestricted funds and how these affect how the funding can be used. On the expense side, start with program needs and then add in your admin and fundraising costs. Include both direct and indirect costs, and account for inflation, staff raises, benefits. So just a couple of notes on the expenses. Ensure the budget includes true program costs and not just the obvious ones. And include overhead like rent, utilities, IT, along with expenses that will typically change year to year, like capital needs and maintenance costs, to ensure all expenses are accounted for and all your true costs are budgeted for. Monitoring the budget during the year. Some key ways to monitor your budget would be to compare your actual first budget monthly or quarterly, investigate variances and understand why they occur, update forecasts as conditions change, and share reports with management and the board, and always adjust as needed. Regularly monitoring the budget turns it into a management tool. It's important not to just know something's over or under budget, to actually to get into the reasons why it occurred. And on any findings or budget variances, it's important to act early. So if income's lagging, then you can look into ways to cut costs or accelerate funding. So yeah, as I said, monitoring the budget is very important to do regularly, and helps identify any issues quickly and plan a prompt response. Avoiding pitfalls in budgeting. So some common budgeting pitfalls are overestimating revenues and underestimating expenses, ignoring cash flow timing, and treating the budget as set in stone. Some ways to avoid these would be to be realistic and flexible in your budgeting. Again, I'll stress that keep revenues budgeted conservatively and expenses realistically, or even on the higher side. That helps keep the budget flexible, and treat the budget as a living document. Should be regularly monitored, evaluated, and revised based on financial results and the organization's needs. A strong, flexible, and well-monitored budget is one of the best tools a nonprofit has, and can help ensure long-term mission and financial success. That wraps up the creating and monitoring budget section. Here, I'll turn it over to Ridge for the next few sections.
Thank you, Nick. Next, we'll go over the role of the board of directors and leadership, and a few of the internal financial responsibilities that are tasked with the CFO, accountant, or CEO and executive director. First on the list is ongoing financial monitoring and stewardship of internal controls. As Nick has mentioned in previous slides, it's very important to regularly review financial data, key ratios, and key performance indicators relative to your organization. And then we'll cover the stewardship of internal controls in a few later slides. Other responsibilities include preparing budgets, forecasts, and financial statements as you draft next year's budget and different forecasts. Engage with organizational leaders, discuss historical data and potential economic changes in the near future, and verify any of your assumptions with team members. Additional responsibilities include ensuring accuracy, completeness, and internal readiness of financial data. You want to review the information at month end, come through it with the executive director, ensure completeness and that all data is recorded in the correct period. Donations are properly classified, and that all financial information is in accordance with generally accepted accounting principles. As for the CFO and director, you'll want to collaborate with the CFO on financial reports and budgets, as well as provide operational context and align financial planning with strategy. Schedule monthly review meetings, walk through a performance dashboard if you have one. If you're unfamiliar with a dashboard, it's just a quick snapshot of key financial information for the organization. And those are some that you'll go over as you need be. And then lastly, review and approve internal financials before submission to the board. Verify that financial data meets audit requirements, along with donor reporting and regulatory expectations for a nonprofit, i.e. Tracking restricted grants and proper fund balance reporting. Next, we'll go over what makes a good board of directors. First off is covering key specialties. Ensure the board is comprised of various knowledge bases. Think about having someone on the board who's an attorney who can give you legal or compliance insight. Maybe a CPA or a finance professional who can give you good financial oversight, and even maybe someone with a HR background, fundraising experience, or marketing skills as well. A well-rounded board goes a long way in advancing the mission of your organization. Additionally, you want diversity and expertise and experience. We think it'd be wise to have a mix of professional expertise, community ties, different ways of strategic thinking, as well as varying perspectives on how to progress the mission of the organization. Continuing that thought, you'll want to focus on the alignment of skills and organizational needs. Think about near-term goals as well as future aspirations. You can direct your recruiting of board members to fill organizational gaps. And lastly, you want a clear focus on oversight and strategy. Ensure the board can focus on setting the vision and strategy, not getting bogged down in the day-to-day details, but maintaining oversight of the CEO and executive director, and being able to monitor overall performance instead. Next, we'll go into key responsibilities of the board treasurer. One thing you want to keep in mind, most importantly, is does your treasurer have the right qualifications? Do they have the proper financial skill, integrity, and strong understanding of the organization's mission in order to carry out that role successfully? Are they familiar with not-for-profit standards? Do they have experience with financial management? Do you have any background in preparing budgets or managing cash flow? These are all important elements of being an effective treasurer. The treasurer will be highly involved in overseeing the organization's budget and financial health, as well as in the creation of the budget and financial reports, monitoring each and ensuring proper cash flow management throughout the year, as well as long-term planning and management of reserves. They'll also be a part of managing financial reporting and compliance. This means overseeing and reviewing and working with organizational staff to maintain accurate records of all financial transactions, including receipts, disbursements, bank reconciliations, and other specific procedures carried out by the organization. And then lastly, ensuring accurate record keeping and communicating financial health to the board. Are the financials in accordance with generally accepted accounting principles, not-for-profit standards? If so, then it's time to prepare key financial reports and communicate the financial information to the board. Then next up, we'll cover integral functions of the board treasurer. You'll want to support a culture of transparency and responsibility. Communicate not only successes, but also any challenges or deviations from the original plan, building trust amongst stakeholders and team members. As Nick has covered, regularly review your budget. It's a living document. Go through it, see any changes that have occurred, and how you can improve or get better, or make adjustments if necessary. Another responsibility would include providing information to the board. Make reports accessible. Use generic or plain language, and help explain with the use of visual aids, such as charts or graphs. Those can go a long way in simplifying complex financial data, and highlight key variances, such as where the organization may have been under or over budget. Understanding that financial data drives strategic decisions. Next, you'll ask questions and seek clarity. Always establish a tone of collaboration and shared goals. Make sure board members understand that you're asking questions just to clarify uncertainties in order to make informed decisions and accurately report financial information. And then lastly, ensure policies and controls are being implemented. Verify your organization has written financial and internal control policies. Strong internal control policies serve as the tent poles of a well-run organization. If necessary, even update the internal controls for any shortcomings you notice throughout the year. We even recommend throughout the year going through your internal control process, walk through that, see if each step is being performed. Are the monthly bank reconciliations being done? Are they being reviewed? Who's reviewing them? How timely are they being reviewed? Another step would be checking your expense reimbursements. Are those being properly approved, documented? Walk through that throughout the year. Check if each of the steps are being done. As like I said, internal control policies are a tent pole to a well-run organization. Next, we'll go through the implementation of internal controls and financial policies. The importance of internal controls. Internal controls, as I've mentioned in previous slides, are policies and procedures that can help protect the organization. Effective internal controls also provide operational steps to complete a task, streamlining processes, which can help reduce waste and improve organizational efficiencies. They also encourage compliance and build donor confidence throughout the audit. Internal controls and financial policies can help the organization adhere to any relevant laws, regulations, and grant compliance requirements. And ultimately, controls are about prevention, not mistrust. Effective internal controls can both protect the individuals in the organization as well as the organization itself. Good and effective internal controls creates a check and balance system, so issues such as fraud or errors are more easily identifiable. And this can ensure that financial information provided to the board, donors, grantors, and stakeholders is reliable and trustworthy and helps safeguard the organization's assets. Next, we'll go over the purpose of internal controls. As I mentioned in the last slide, internal controls can help prevent and detect fraud, inefficiencies, and errors, as well as ensure accurate financial reporting. Controls can either be preventative, such as segregation of duties, which can stop an issue before it occurs, or detective, such as bank reconciliations, which identifies an issue after it occurs. But corrective actions can be made to solve the problem. These are both items that we'll cover in future slides. Ultimately, strong controls can be the backbone of a reliable and accurate financial reporting system. And then you'll want to safeguard organizational assets, especially in the current IT landscape with increased risk related to cybersecurity threats. One small preventive measure you could take with your financial institutions is the use of positive pay. Some of you may be familiar with this term, but those who aren't, positive pay is an automated cash management service designed to prevent check fraud by providing your financial institution with a pre-approved list of payments. This can include the vendor name, the check amount, the check number, as well as the date. And then the financial institution will go through your bank account and find any discrepancies for you to confirm against your pre-approved list. And then lastly, internal controls go a long way in promoting accountability. Next, we'll cover effective internal controls. Here we'll go over cash receipts and cash disbursements as a segregation of duty. Segregation of duties ensures no single person has complete control over all phases of a financial or operational transaction. It can help prevent errors or fraud or misstatements or misuse of company assets. For cash receipts, we suggest that mail be received by one individual independent of the accounting function, recorded to a deposit log, then verified by a separate individual who then performs the bank reconciliation. And then for cash disbursements, one individual would initiate the purchase requisition according to the company's policy, and then a second individual would come in and review for purpose and approval. We also suggest that the organization consider dual signatures for transactions over a certain dollar threshold. In this example, 5,000, as someone who initiates payments following the cash disbursement policy set by the organization. The board approved check signer would verify the invoice, confirm to the budget line, make sure the funds are available, and the expenditure is in compliance with donor restrictions, if there were to be any, and review the purpose of the payment, verify that the vendor is in fact legitimate, and then ensure the expense aligns with the mission's purpose and board approved budget. For items over the certain dollar threshold, having both signatures provides a control that reduces the risk of a single person diverting funds for any unauthorized purpose, or any errors such as an incorrect dollar amount or inappropriate payee slipping through unchecked, and prevent any misuse of the organization's assets. Here we'll touch on a few more examples of preventative internal controls. For reconciliations, one example is contribution reconciliations. The organization could maintain a donation worksheet, track classification such as restricted or unrestricted, and then confirm expenditures comply with those restrictions, and then make sure that any remaining monies are properly classified in the accounting ledger. We touched on this earlier, but another example is a bank reconciliation. You could verify the bank reconciliation to make sure that there's no unauthorized checks, no duplications, no transpositions. And then obviously, if your bank reconciliation doesn't tie back to your trial balance, you know that corrective action needs to be taken. Next would be maintain documented financial policies. One such example would be a capitalization threshold. All fixed asset purchases over a certain dollar threshold, i.e. 2,500, would be capitalized and reviewed for a useful life. Such other examples would be cash management, purchasing, credit use, expense reimbursement. All of these should be board approved and made available to necessary employees and shared with your auditors. And then lastly, an established finance committee. An experienced finance committee could track changes in grant funding and be able to make swift and informed decisions to recommend cost reductions if monies would be reduced, or suggest new uses of funds according to the organization's budget. And now that we've covered effective internal controls and how the board and leadership can implement them, we'll go over the importance of audits and annual reporting. And audits and annual reporting can help meet contractual obligations. Many loans and grant agreements can or require nonprofit organizations to undergo a full financial audit or submit audited financials with those. An audit helps an organization ensure any legal and regulatory requirements are met to satisfy the conditions of grant-making bodies. One such example would be a single audit that would ensure compliance. What triggers for many of you the audit or review is the Chart 500 requirements, which states that any organization with a gross annual revenue over 1 million must file an audited financial statement or a review for gross annual revenue over 250,000 but under $1 million. Audits and annual reporting can also promote accountability and transparency. An audit can help ensure that the organization members and management are held accountable for their financial responsibilities, and that the information is accurate and transparent. And then lastly, it can identify areas for improvement. An external audit provides an objective opinion on financial practices. Suggestions are included in a management letter and are there to help management improve operations and efficiencies. Things to also consider as part of your audit and annual reporting would be items necessary for your 990 reporting. Does your organization have a written whistleblower policy? What about a document retention destruction policy? And does your organization have a policy on how you review the 990 before submission? And then next, I'll flip it back to Nick real quick for some best tools and best practices.
Yeah, so I'll just go over the first couple tools and best practices. Um, Back to the budget section. It's important to be continually monitoring your budget versus actual results, and can consider including this in your packet to the board. And then frequently analyze your cash flows throughout the fiscal year. I think Rich could take over now with the last few.
We also suggest consider contracting a third-party IT provider. A third-party IT provider can come in and help facilitate some trainings with your staff, such as how to identify a phishing attack or any social engineering attempts. They can also provide additional help in configuring firewalls and even safekeeping certain organizational systems and restricting certain accesses, which could serve as an additional internal control. And then we also recommend reviewing and updating financial policies annually to stay current with best practices. One example would be, does your organization have a donation acceptance policy? Do you have any restrictions to the donations your organization could accept, given potential donor imposed restrictions? Next, we'll share with you our sources. These can be provided to you when requested, and then we'll open it up for some quick questions, if any, and then there will be time later in the hour for more questions if necessary.
Sorry, Lindsay, we kind of ran into your time a little bit, so maybe we'll save Q&A to the end so you can do your presentation.
Whatever works.
Yeah, I think if you have any questions, throw them in the chat, and then we'll let Lindsay go on with her presentation. And thanks so much, Rich and Nick and Lori, for that overview on finances.
All right, I will share, but if you do have questions for Nick and Ridge, please do put those in the chat. All right, are there any questions or should I go on, Lauren?
I don't see any questions at this point. Nope.
All right, and you can see my slides now?
Yep.
Perfect. All right. So my name is Lindsay Baldwin. I am the CFO for Fort Drum Regional Health Planning Organization. And just quickly about FDRHPO, because it will give context to the slides. So we are an organization well located in Watertown, Jefferson County. We do support the Tri-County region. And then there is one program we actually extend out to an 8-county region. That's our EMS program. But our mission is to strengthen the system for health for the integrated Fort Drum and civilian community through analysis, identification of needs, and leveraging resources to fill gaps through innovation and collaboration. We have been a 501c3 for 20 years. And currently our priority areas are behavioral health, health information technology, healthcare workforce, population health, and EMS. This is our organizational structure. Again, this will loop back to this and how this applies to our financials, but you will see, so we do have a formal board of directors. We have our executive committee, and then we have our policy and procedure committees, which are finance, audit, and governance. And then we have those that are in TAN are more of our program related steering functional areas, such as those priority areas we just discussed. There is a dotted line around North Country Initiative, while not directly related to Fort Drum Regional Health Planning Organization. Our staffing have dual roles to support that organization as well. And I just included that really because that'll show up in our functional expenses. So I'm really underlining things that Nick and Ridge went through in their presentation and showing you just an example of how they're operationalized at one nonprofit. Understanding there's different types of nonprofits and different strategies or policies and procedures might meet your needs differently than they meet ours. So again, just an example, but balance sheet, income statement, and budget versus actuals. So that's something we review every quarter. So I do prepare those and I closely work with our executive director to go kind of line by line in detail. And then also use that quarterly reconciliation between budget and actual and engage with the program leadership that those directors are well connected to their own budgets and plan to make sure that those budgets are fully expended by the end of their cycle. Then all these documents do go to our finance committee, which meets quarterly, and then the following board meeting. For cash flow, that's something that is managed constantly. We do try to maximize what's in more of we have an ICS account that earns more interest than our checking. So just constantly looking, ensuring we're within the 250 for our checking accounts, and when we can move stuff over to our ICS, and that is with a lot of support from the executive director as well. But then annually, our finance committee and board does review this, and that informs our investment review. And we do have a policy that that guides us, but it's understanding our cash flows. We look a year or two. We do have a 4-year ladder of investments, so we have to analyze our potential cash needs. Not just kind of day to day, but also long term. And then finally, the statement of functional expenses is, as previously mentioned, it is an annual thing that needs to be done as part of the audit. And we really live by our classes, and we use QuickBooks Desktop for our accounting software. And we kind of bucket them, and I'll show you in a second, into our priority areas. So we do get an understanding what our functional expenses are by our areas. And here's kind of in the weeds, but first step is we really kind of give those high level categories. We want to clump different stuff. You'll see we have emergency services, we have our health workforce. And then underneath here, so EMS, we've got charts, we have EMS other, we have this NC EMS PA. So those are those classes in QuickBooks that'll roll up to that overall kind of functional expense category. And then we'll need to run our profit and loss by class, and then kind of add those different expenditures up across the classes that make that functional expense category. And that's what we've got to do and present within our audited financials. Within the budget section, the things I would highlight from Bauer's presentation is the use of historical data. This is just an example of our template that we use. So you'll see, I'm sure many are in the 2026 budget planning period. So we really look at 2025 budget, what are our projected 2025 actuals, and then we got our 2026 budget. And then we will look at within the type of accounts. So we want to see what is kind of direct public support. So what are those corporate contributions that might be from a foundation? How about government grants? What's federal, what's state? Our investments, and then we do have some service fee income. And this just drives home the point of diversifying income streams. And this is kind of how it makes it very clear to our finance committee, to our board, how diversified we are or are not, and can exclamation point some potential risks, especially as there's some uncertainty in the federal government landscape. This can easily showcase what income and expenses are tied to those grants. And then over to the right-hand side, this is just an example of kind of those classes that we use in QuickBooks. And I included 3. I will tell you there's over 20 that we have within our budget that makes up our budget. And that's managing kind of mini budgets within a full organizational budget. And then I would also recommend complementing a budget with a budget narrative to support the finance committee and board's true and full understanding of what is being recommended. I'll also show this next slide. It's pretty tiny. It couldn't fit well onto a slide, but this is a supplemental document I always use for our budget that I pretty much live by. And while I have one that's for the budget period, this is what's a living document for our organization as we have to revisit allocations. Maybe there's a new grant received or one that's no longer. So we will have to reanalyze staff allocations across the different grants or service areas. So you'll hopefully kind of see to the left, we have the name. So AAA, there's there's going to be multiple lines per person, depending on how many areas they're allocated to. Then you'll have their salary. As Bowers mentioned, definitely budget for increases and get a total salary projection. Also for benefits, the medical match that your organization may provide, and also accounting for those increases, because I'm sure others have seen similar 10% plus increases year over year there. So ensure budgeting for that, for retirement, if you have a match, for all the employer taxes, disability, workers' comp, so you can get a total benefits number. And here too, I'm sure everyone's aware of this as well, but this is just like a starting point. Open enrollment will happen and people may go on or off the plan. So we do tend to be conservative in the benefits. While we budget on actuals, we do buffer that a little bit to account for if someone does come on the plan, if they have a qualified event. And then here is the labor applications by the different grant types. So then it does split out that projects percent, and then what percent of their salary and their benefits need to go to that project to reflect their time and effort to that. And that's how you really drive those budgets within your budget. And then also off to the right, where you have your overall budget of your rent, your utilities, your internet, your corporate insurance, your supplies. We want to also make sure those are allocated accordingly to the various grant or funding sources. So this is a spreadsheet I use to make sure we're aligning all the different expenses within the applicable budgets. Then for the role of the board, the things I would emphasize here, bylaws really sets the scope and the appointments for our FDRHPO committees. I would say that our finance committee, I already mentioned, meets 4 times a year, our audit committee once a year. And then governance, I didn't put that on there, but that also typically is once a year, but as needed if there are additional policies throughout the year. Our treasurer is also our chair of the finance committee. This position does have a strong financial background. They review our monthly bank reconciliations. They report out to the board and is a signer on the organization's bank accounts. And then the things I would mention out of the internal controls and financial policies. So know that many grants do require certain financial policies and procedures to be in place. 2 examples are DOH and HRSA. So definitely look for those requirements when submitting or kind of renewing those grants. But the examples, we already heard most of these, but cash management, purchasing, audit, timekeeping and payroll, cost sharing and matching, expense reimbursement, even a policy to just set that expectation of how you are accounting. So what does your calendar year look like? What's accrual versus cost-based? Utilizing what accounting software, maybe there's a payroll software, classifying your direct versus indirect expenses, having that threshold for capital equipment, what is the dual signature amount, and then we do also have an audit policy, and I didn't have a separate audit slide, but I'll just speak quickly to that here. So we do have within the finance and the board, they would be the ones to let us know to put out an RFP for audit services, but we don't have a strict policy requirement on so many years. We have to do an RFP. It's just driven by the governance structure. And that is something too, that it is okay to continue with the same organization. We don't have a mandate that you have to change accounting firms every so often, but we do have a recommendation within, or not a recommendation, a statement within our policy that says we do need to have an audit firm specialized in nonprofit. So just something to note too, the audit, if there is an RFP, it's not just a general out to the public kind of RFP. It is very strictly researched to ensure whoever would receive that RFP has that specialized experience in nonprofit financials. So finding the right audit firm is a very important part of that, and happy to share any kind of outlines of policy or RFP there. And then the finance committee oversees our financial and internal controls policies and procedures. And kind of to highlight there, it's policies and procedures. So we have like just a small, maybe one little paragraph that's policy that's followed by procedure. And that's constantly reviewed internally. It's always reviewed annually, at least annually, by the board. And I would say just maybe some other thoughts too, to include within policies that might not be in financial and maybe in financial and internal controls, but for us, we looked at standalone policies, but that'd be investment policies, credit loss policy, and contract or MOU policy. And that is all I had, so I can stop sharing and open it up in general to all questions.
Awesome. Thank you, Lindsay. We have a couple of questions. The first being verifying that nonprofit boards do need to adopt a budget at the beginning of each year.
Yeah, I can take this one. Yeah, as far as I know, that's a requirement. Lindsay or Lori, please correct me if I'm wrong, but
It is something we do in advance of the beginning of each calendar year. Yes, so you do have to, you might have those individual budgets within, say, you know, a New York State timeline of April 1 through March of the following year, but we do follow a calendar year in our financials. And so you do have to do some estimating of, you know, what's remaining of that one grant year, and then what's the chances of that grant being renewed. So, because everything won't line up perfectly, but yes, having an organizational budget, and for our case, it is a calendar year, January through December.
Okay, thank you. And then Max asks, what would you recommend to our local nonprofits who may not have audited financials to share with potential funders? What information outside of 990s can they share to be transparent and responsible?
I can take that one. So obviously, I think the 990 is a good start, but otherwise, I think you could share your internal financials from your QuickBooks or whatever general ledger system you might be using to also be transparent and share your information. If Nick or Lindsay have anything to add.
This is Lori. You could drive them to your, your website. Usually smaller ones, they start with a website, share your mission statement. If you're trying to collect monies for, specific purposes, outline your goals and your budget for that. And it might push you to getting a review at least, so the donors have some comfort, over the numbers and what the mission of the organization is.
Okay, thank you. Our next question is pertaining to expense management. When an organization is classified as a public charity, is there a resource treasurers can use that depicts the specific things funds are not allowed to be used for?
I'll defer to Lori on this. Anything you want to add?
Specifically, we can pull stuff from that maybe to follow up and that can be added, like if there's specifics on that. Off the top, I'm not, where we can go, but we'll find that and we'll push that back through and then you can forward that on.
Okay. Do you have recommendations for a very small nonprofit when it comes to internal controls? For instance, one that just has an executive director and of course the board. So an organization that doesn't have a CFO.
I can take this again, this is Lori. I actually sat on a not-for-profit, so it's really that's small and just starting. And I think it's, that you have to kind of review those controls and delegate and make sure you have the officers there and you got to split up the duties and, make sure there's an oversight, that there's financial accountability. Someone else is reviewing the bank reconciliation. So I think that's just something, if you're going to have going to create a not-for-profit, you got to develop those policies and those procedures and try to mitigate, the lack of controls just due to the lack of people involved, and develop those policies and hold each other accountable, have regular meetings. I know, especially when they're starting, I've been on ones and they don't have regular meetings and sharing the financial information and looking at that detail. So you got to treat it like it's a bigger organization and use the people that you have. And also when you're small, make sure you get those people with expertise, try to get your accountant on there, try to get a lawyer and, someone that might be mission specific, expertise. So use some foresight in the beginning for those new, smaller organizations.
And then we have one more question that I'm seeing. We are having trouble getting an auditor, so we're a couple years behind. Do we go backwards or just pick up from current?
I'll touch on this one too. And, so you don't want to lose your exempt status. You got to get your 990s. If you haven't done that, at least get your 990s done. And if you're required to have audits, you can go backwards. It's going to be pricey, and that's probably the cost might be the reason why it's holding you back on that. Because it is costly to have an audit, and but that should be part of your process and part of your budgeting too. So you have to go out for RFPs, but not necessarily if you don't need it. If you're required to have an audit, then you're going to have an audit. If the thresholds are not, then, maybe you have a review or just go forward if the board is acceptable to that.
And then is there a threshold at which audits are required?
Rich, go ahead and take this one. You reviewed that.
Yes, I touched on this earlier. So for Chart 500 filing, if your gross annual revenue is over 250,000 and under $1 million, you'd be required to submit a review by an independent auditor. And if over $1 million, it'd be required to file an audited financial statement along with your Chart 500.
Perfect, thank you. If anyone else has any follow-up questions, please throw them in the chat. We have a couple more minutes. Huge thank you to you guys for presenting today and sharing your time with us. I know as we've had these conversations about this training series, we're finding that people that end up in these board roles don't necessarily get the training or know what sort of things to look out for as far as finances go. So thank you guys so much for sharing your expertise and knowledge. I don't see any more questions coming in, but while I have everyone on here, I'm just going to drop a link that has the registration for our next session, which will be on board development on December 4th. And we're tentatively going to be hosting it at the Strand in Watertown. Oh, let me do that. And we have a snow date of January 8th in case weather is not good for that. And we're going to have Sheena from the Gifford Foundation doing the presentation. So we're super excited for that. And then one question just came in, will the slides be available for those who participated? If you guys are comfortable with sending me your slides, I'm happy to send them out to everyone that registered. So yeah, and then this recording will be posted on our website. And I think, Katie, you guys talked about hosting it on yours as well.
Yeah, we'll put it up on the Tug Hill Commission's YouTube channel.
Perfect. Okay. Can wait a couple more minutes for questions, but.
And I could loop back, and it might be a question in response to a question, but to Max, where he said what local nonprofits, what they may be able to do if no audited financials. What is the ability to get a fiscal intermediary? I guess to the Bowers team, is that also maybe a potential option to see if is a local nonprofit who'd be willing to serve as that?
Sorry, Lindsay. So you mean as far as like Bowers providing the assistance to review and provide some type of just overview?
Well, I'm a part of a coalition that doesn't have their own financials. Instead, they work with another local nonprofit to act as kind of their financial, receive donations, pay out expenses, that sort of thing.
I think that's great. If you can piggyback off from, the expertise of another larger organization, then that's definitely a great internal control too. So I would definitely say that's something to look at for the smaller ones that, maybe can't afford to have a CPA firm review and do an audit or a review, and it's not required, so there's another layer there. And you can share that with donors if you're going there, we do have controls in place and it's monitored and here's our financials and things like that. So I think that's a great idea.
Yep. Thanks, Lori.
Well, it's 1 o'clock, so I will let everyone get back to their day, but thank you again so much. And then there was one more question that just came in. What's the web address where these recordings will be posted? I will link those when I email everyone back. Oh, and Katie just dropped the link. So those will be linked in my follow-up email. So I hope everyone got some practical tools to take back to their organizations, and thanks for joining us, and we'll hopefully see you at the next one.
Thank you very
Thank
much.
you guys.
Thank you.
Bye.